Good morning, afternoon, or evening, ladies and gentlemen, Allincrypto here, and welcome back, guys, on this fabulous Friday for what is going to be another jam-packed daily cryptocurrency market update. And as always, if you are new to this channel and finding yourself on my videos for the first time today, don't forget to check out that subscribe button because we drop an update just like this one around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And unfortunately for some, fortunately for others, in this video, in this market update, we're going to spend the time talking about what's kind of going on in regards to the broader markets, the kind of macro outlook in the short term. There's lots of uncertainty that has been reintroduced with a rising oil. We're going to be looking at the correlation between oil and the dollar. What has been the main driver of the dollar? Well, it's been inflation as we see oil kind of popping its head back up. And I'll dive over to this chart very quickly. We are getting higher yields. We also have really good data in regards to the US economy. And we have a Fed that is kind of coming out and saying, and we'll look at some of the comments from yesterday's Fed members speaking, that we might not be cutting in this year. However, we're going to show you that's a bit of a catch-22 because if the Fed don't cut, the average or the expectations are it's around about $500 billion that's going to need to be added at the current interest rate. And if they cut it by 1.5%, which was essentially on the cards this year, it goes down to $100 billion. So there's an inflationary element in regards to that. But this is oil. We're seeing oil spike. We've got the Dixie laid over it. It's not the case in regards to all charts, though. If you look at nat gas, not quite the case. But we'll cover this in just a second. We've got quite a lot to get through. So it's also tax season in April. There's lots of resistance at play for lots of cryptos. You know, we're going to be looking at Bitcoin, the Turtle 2, and kind of giving you an update on that once we've gone through what want to get through in regards to explaining the uncertainty that's taking place in the markets right now. Despite that, gold doing very well, continuing to put in all-time highs. Bitcoin pulling back against gold, but we do expect that to resurge after running into resistance. You know, I think this is just short-term uncertainty. Markets don't like uncertainty. We've got that inflation rising. We've got the Fed coming out and saying, we may not hike, we may not get back, we may not cut, we may not get down to 2% yesterday. And that's kind of putting a bit of a stall box on risk markets and kind of pushing what is an uncertainty trade, which is the Dixie, which I still think is in a broader downtrend to the lower band of a range that you've been in since 2008. But we'll cover all that. Let's start things off. And let's start things off by talking about Fed's Kashkari raises prospects of zero rate cuts. But Goldman Sachs says it would be very surprising. And we'll explain why it's surprising because it kind of becomes, at what point does QT become QE? At what point do you tighten so much that you kind of suppress one area and then it pops up in another area? And what we've seen is the Treasury really, national debt in the US really grow despite supposedly being, the Fed saying, we're doing QT and we're not, we're trying to not increase inflation. But actually we've seen more Treasury debt issued last year in 2023 than we saw in 2020 when, of course, we know what was going on and the bailouts and all this kind of stuff that took place, or bailing out of individuals because the government said you can't leave your house. So Goldman Sachs chief economist Jan said that he still expects 3 rate cuts from the Federal Reserve this year. His comments come shortly after Minneapolis Fed President Neil Kashkari became the latest high-profile official to float the possibilities of zero rate cuts in 2024. If inflation remains sticky, I would be quite surprised if we didn't get rate cuts this year. Quite surprised from Hatzuis told CNBC on Friday. So there was lots of Fed speakers coming out yesterday. You do have a resurging commodity market in some areas. So it's not quite downtrending in the same manner that it was. We're getting kind of flatlining inflation. It's caused a bit of a dampener on risk and kind of promoted the dollar, which is the kind of adversary of risk. And this is oil, WTI crude oil and the dollar. Now, what has driven the dollar? Well, it's been inflation as we're getting that resurgence in regards to, and let's actually throw Bitcoin on here. And the correlation will become very apparent. So this is kind of what's happening in the short term. Where is my Bitcoin chart? It is over here. You can see the correlation here, first of all, between the Dixie and oil, and then between Bitcoin. The dollar up, risk generally down. And you can see when the dollar came down, this is when Bitcoin really started to rally. As this gained strength, Bitcoin took a bit of a dip. And it's kind of doing similar things today. Strength coming in, kind of shrugged it off. But now, as it's kind of accelerating, certainly with this recent dip, Bitcoin kind of somewhat stall boxing. But we'll bring Bitcoin into the sort of picture in just a second. So there's lots of uncertainty. It's tax season. which actually could be quite liquidity draining. You know, there's a lot of uncertainty that's currently taking place. But the Fed, if they decide not to up or to reduce interest rates, are going to be, if the Fed keep interest rates steady, then federal interest expenses will increase by $500 billion throughout this year. If the Fed cuts by 1.5%, which was kind of on the cards this year, then they will increase interest expenses by $100 billion. But if they do that, they increase the risk of oil prices re-accelerating. So it's a real double-edged sword. You know, if they lower rates, it's somewhat stimulatory. But actually, even if they hold rates where they are, through having to fund the deficits that they're in, they're kind of adding to the equation of devaluing money and the system itself. So it's a real catch-22, I think. It's both, you know, I don't think there's any clear cut. I think the uncertainty is really weighing on markets generally. So US debt always goes up. The only time it decreased is the post-war era for about 18-month stretch around 2009. That's when private debt growth slowed down and public debt took longer. It's almost $100 trillion. So this is all sector debt, securities, loans and liabilities. This is never going to get paid back. Debt will never, ever get paid back. And this is how the system dies on a collapse of that. And this is why we say it's too good to true that Bitcoin's kind of come into the fold. So I think you've also got treasury buybacks taking place. This is interesting because they've been buying the treasuries with the reserve repo. There's too much for me to kind of cover in a 10-ish minute video. But what you've got with markets generally right now is you've got a stall box due to inflationary fears, due to uncertainty in regards to forward guidance on the Fed, and the kind of plans that were in place now being readjusted. Very interestingly, all of this on the kind of macro side of things is all concurring around resistance for Bitcoin. The most important chart, and I continue to say this, is the total 2 for me. So our projection for the total 2 is that it was going to run into this key level of significance around about 1.25 trillion, and it was going to form a right shoulder and then set up to see the total market cap go to 3.7 trillion. Now, I still believe this is the case. There's no reason to deviate from the path that we are currently on. Bitcoin doing what it kind of should be doing at resistance and pulling back. But my assessment is that this is going to be a lot shorter lived than people expect it to be. I believe there is a very supportive macro outlook for risk generally. And Bitcoin is going to be the best performer in that. And we know what's going to happen with really the altcoin market, which is the total 2, which nobody's talking about more generally. So I still believe this is going to $3.7 trillion. Nothing has changed in regards to this plan. Yes, we've got all this uncertainty in regards to the kind of macroeconomic environment. You're seeing the dollar gain strength. Very important day today, actually, with non-farm payroll. Let's actually take a quick look at that. So this is going to be important to watch because this is either going to lean or support the dollar. If it's strong, it supports no need for cutting rates. If it's weak, it supports cutting rates, and you're likely going to see kind of risk do well off the back end of that because you'll see adjustments in regards to forward rate guidance. The Fed is still the main man when it comes to liquidity, and that's why there's this kind of stall box. You know, we thought we were getting rate cuts this year. I still believe we will, and it goes back to that interest payment thing. You know, both sides of that are actually inflationary, just which is worse. I also don't think they care about the deficit, to be honest, and the kind of debt. It's at this point where it's kind of monopoly money, you know, but that's potentially for an entirely different video. So we see, obviously, non-farm payrolls today coming in, I believe, in the next half an hour. A drop from last time, but we'll see if this is a beat or a miss, and that's obviously going to propagate the dollar. And we know what the dollar's doing in relation. We can take Bitcoin in a baby blue off now in relation to oil, which is in the Japanese candlestick. So an emerging inflation, not in all areas, more of a stagnant one, more of an uncertainty introduced into the markets. Fed also coming out and saying, until the job's done, you know, we don't really need to cut rates. There's not that need to cut rates in regards to the economy. GDP forecasts up. I think you're going to see other nations like the Eurozone and others cut way before the Fed do. Because of just how strong things are being. And today's job market print is going to be a crucial one. And on top of all of this, you know, crypto kind of at resistance. Lots of altcoins like HBAR, which is a kind of favorite of mine, just doing what coins do. This was a break, in my opinion, of a key level, setting it into an uptrend in a stage 2 and now coming back for a retest. So I'm not worried in the slightest. I think it's why it's helpful to have channels like this that kind of quieten down the noise and don't over complicate markets and just kind of have a broader plan on things and don't change their narrative based on the day-to-day flows. But there's a lot of uncertainty. Is the Fed going to rug us and not do cuts this year? Are they just saying they're going to do cuts because of the election and things like this? We will see. The jury is still out, but I think April, lots and lots of things going on. For example, such as tax season. People have got taxes to pay. They're going to be selling. You see a kind of swelling into the treasury account, and that's kind of draining in regards to the environment. It's also an interesting month from a number of different perspectives, but we'll maybe cover those on later videos. So this is an update on kind of what's going on in the short term in regards to markets, more on the macro side of things. You've got that rising inflation. Remember, gold is a commodity for all intensive purposes. And that's kind of leaning on forward guidance in regards to what the market's going to be getting. However, I still think the broader trend when you look at things is that they are going to continue to inflate the monetary supply, albeit through debt and currency itself. And you are in certainly Bitcoin and crypto, an asset class that's going to benefit probably more so than most risk assets as a result of that, despite the short-term stall box and kind of resurgence in regards to oil, probably most predominantly. Coffee is also doing well. There's a number of sectors that are doing quite well. So that's really all I've got for you on this video, guys. Bit of a rush one, bit of a short and sweet one. But I'm going to love and leave you on that note. I hope you all have a fantastic Friday and a great weekend. And I'll see you all in the next one. Thanks all for watching. See you in the next.